Have you ever wished you could see the warning signs in the market before prices start moving? Imagine knowing that a company is in trouble or about to shine just by listening to what the world is saying about it. That's exactly what we're diving into today, a powerful strategy called AI-powered ESG sentiment investing. Don't worry, we'll break down what that means in simple terms. Let's start with ESG. It's just 3 letters that stand for environmental, social, and governance. Think of them as 3 ways to judge how a company behaves. Environmental is all about the planet. Are they polluting or going green? Social is about people, how they treat employees, customers, and communities. Governance is about leadership. Are the bosses honest, fair, and making smart decisions? Investors use ESG to figure out which companies are likely to thrive over the long run and which ones might be headed for trouble. Now here's where it gets interesting. Instead of just looking at a company's numbers or official reports, what if you could track how people feel about a company's ESG behavior in real time? That's what sentiment investing is all about. We look at the tone of conversations, whether in news articles, tweets, blog posts, or interviews, and see if it's positive, negative, or neutral. This is where AI comes in. Artificial intelligence can scan thousands of headlines, social posts, and reports in seconds, something no human can do that fast. Then it gives each company a sentiment score. A lot of negative buzz? That could be a sign of trouble ahead. A surge in positive mentions? That might point to opportunity. And this isn't just theory, research backs it up. One study found that when there's a sudden spike in negative ESG talk on social media, a company's stock can dip soon after, sometimes before most investors even notice. Another study showed that mixing ESG sentiment data with traditional analysis made it easier to predict market moves. So why should you care? Because this approach lets you invest with your values and potentially spot market changes earlier than others. You're protecting your money from companies with hidden risks, like scandals or environmental disasters, while getting a heads up on those with strong reputations and leadership. Here's how it works in 3 steps. First, AI collects data from everywhere: news sites, social media, even official filings. Next, it analyzes the tone of what's being said. Finally, those insights turn into signals, clues that can help you decide whether to dig deeper, hold, or make a move. Big investment firms already use tools like RepRisk to scan over 100,000 sources in multiple languages for ESG risks, from child labor to pollution. And now, smaller investors can tap into similar technology. Of course, nothing is perfect. AI can misunderstand sarcasm, misread context, or overreact to hype. And not all ESG ratings agree. Different services often give the same company very different scores. That's why it's important to use this as a guide and not gospel. This mix of smart tech, real-world chatter, and ethical investing is why I'm kicking off this new series. In the next episode, we'll look at specific tools you can use so you can start turning market talk into market moves. If you want to build a portfolio that's smart, fast, and aligned with your values, hit the subscribe button and join me in episode 2, where we'll take these ideas from theory to action.